To introduce our next presentation here today. It's going to be a phenomenal, a really, really, really good, excellent, best fireside chat between Rubicon Organics. That's being hosted by Mathieu Martin from Rivemont MicroCap Fund.
Thanks, Bobby. That's quite the intro.
Sitting. Sit. Okay.
Okay. All right, so I'll start by disclosing that the Rivemont MicroCap Fund is a shareholder of Rubicon Organics, so that's out of the way. Margaret, let's start with the 1 minute elevator pitch on Rubicon Organics.
All right, I don't have all my slides with me, but I can do a very sneaky, quick little... Who is Rubicon Organics? I see a lot of friendly faces in the crowd, and so thank you for coming and supporting us today. We are Canada's leading premium cannabis company, which I know the word cannabis has a lot of investors shuddering after the last number of years, but we're looking to build a reputationally strong, high integrity, high quality company. And we're doing that through our proven brands. So we have 3 flagship brands. They are leading brands in each of their categories: Simply Bare Organic, 1964, and Wildflower. And we'll talk about each of them in a little bit. How we do what we do is around quality. We have 2 facilities. One is just about to turn on, and I know we'll talk about that today. But our mainstay facility is called Pacifica in Delta, British Columbia. Best place in the world, in our view, to grow weed. We grow with living soil in that facility, which gives us unique IP, beautiful terpene, which is the flavors in your cannabis. And we're on a very exciting and interesting growth trajectory that we're going to talk about a little bit today.
All right, that's good. That's great. Thank you. Margaret, can you tell us more about your background and how you got involved with the company?
So I was a competitive rower. I'm very tall, as you can see. Through high school and university, I was that kid that was up at 4:45 in the morning and hurt my back and really wanted to be in business when I was just made the national B boat, never made the A boat. Ended up getting the opportunity to travel abroad quite a bit with Sauder Business School. Then went and did my CPA at KPMG, spent 7 years, almost 7 years there. 11 years there, but 7 in the UK. Then worked in the mining industry with an individual who had 5 public companies that were very much on the growth trajectory. Learned a lot more about, I would say, going to a corporate development group than it is. I wanted to build something, and that was my passion. I got tapped on the shoulder by a friend who said, "I'm going to be the first money into Rubicon." So I said, this was 2015, pre-legalization. And at that time, I said, "Ooh, thank you very much, but I don't think this is the right fit for me." On the 3rd phone call, out of respect for this individual, I took the meeting and I understood how I could help. And I understood that I knew how to build a business, build a team, get it going. And I said, "I'll work nights and weekends." That was over 10 years ago now. And 3 years ago, I transitioned into the CEO chair. And since that time, the beginning of my term, we were very much in a down market with cannabis. There was still a lot of price compression from oversupply, and there was no money coming into the sector. So nobody was going to come and save you. Under my term, in particular, in the last year, we saw the turn in the market at the end of last year and decided to be much bolder with where we wanted to go. And so here we are today in what we're calling our transformation year.
That's great. One thing that also impressed me from the get-go about Rubicon, when you invest in microcap companies, it's a bet on the jockey type of thing. So at least for me, so I pay a lot of attention to the team, the executive team and the board. And I think you have a very impressive team and board. So I'd like you to touch a little bit more on that.
I wish I had their slides in here. We're very, very lucky to have some incredible talent on our team. Our chief operating officer is a woman named Mel Ramsey. She came from She started her career at the Body Shop, then Beiersdorf in Germany with the Nivea brand, and then worked with Diageo in growth markets around the world. And then we recruited her to Rubicon. She was friends with our former president. Glenn Ibbott, who's here today, tried to retire, has too much energy for that. And we were very fortunate this year to bring Glenn into the organization. He's currently our interim CFO, but Glenn's been through scale and been through a lot of different growth with his time at Aurora for 7 years. So it's been a real game changer bringing him on the team as well. In addition, we've got real depth through our executive team of people that we have a bias to promoting our people because they've learned grit. They've learned about not having tons and tons of resources. So they're very solutions oriented and driven to be better and to win. We also, as a $40 million company, have a board of $1 billion company. So 3 years ago, as I was coming on board and still in the interim chair, our existing directors at the time said, this is time to do what's next for the company. We're going to bring in a very investable board. We were very lucky to attract incredible talent. We've got the likes of Michael Detlefsen, who's a well-known strategist and has incredible experience around the world. Ian Gordon was with Loblaws the significant part of his career, very senior in the organization. Karen Proud is currently was the president of Fertilizer Canada, so knows government very well, and now is the CEO of the Grocery Code of Conduct. Doris Bitz, our current chair, took a business from 80 million to 800 million in scale. These individuals are not people that are giving me a rubber stamp. And I can tell you, there are days when I think we probably should have gone with a board that's not going to push us as much. But one of our values in our company is excellence. And I like to call it competitive spirit. Just because we're the cheesy West Coast weed people doesn't mean we don't want to win. And we want to win. So we've got a board to help us to do that.
And I would also add that the amount of insider ownership in the company is pretty high. And the board members have stepped up to the plate in the last financing also to invest their own capital behind the business. So that's another thing for people to consider as well. Okay, let's dive into the business. You have your 3 brands up on the screen. Can you tell us more about the brands and the market positioning for Rubicon in the market?
So we focus on the premium sector. Our vision is to be the most trusted house of premium cannabis brands. You'll notice it doesn't just say in Canada. And we're looking to elevate experiences for people everywhere. In elevating experiences, that's our internal rallying cry. It's around everything that we do, from sending our pallets out to our largest customers on time, in full, and being measured on such. It's every consumer opening a package and having a great experience. So we've built our brand portfolio on that basis. We are very focused on staying in premium. We don't want to go into the other categories. We've looked and like to test and learn. Our first brand is our Simply Bare Organic brand. It's our most profitable brand. And that brand is really about leading genetics, beautiful terpene-rich experience for the connoisseur, and new news. We've spent the last 3 years working on what we call Fight Club, and I won't tell you much about Fight Club other than it is Fight Club, which is our genetics strategy. And that is about getting new and novel, interesting flavors into the market. We want to be not just Canada's leaders on genetic, we want to be the world leader. And how we're doing that is demonstrating consistently bringing out beautiful genetics in that Simply Bare brand. We believe in 3 to 5 years, there'll be considerable value attached to that. And it's more like the fashion house. So if you think of looking at Paris Fashion Week, and I'm sure all of you are very into Paris Fashion Week, these extravagant and really interesting things come down the runway, but they make all their money off of handbags and perfume. And I want you to think like that about how Simply Bare is it's very profitable, so it's a little bit different than the fashion houses, but B, it shows innovation and interest to those to the connoisseurs in the market, and gives us a bit of a halo. The next brand, which is the engine of our business, is called 1964 Supply Co. And if you're very nice to me, I have brought product that we have to buy in store. I can personally provide it to you. So if you want to have a few little tests, or if you're meeting with us one-on-one. But 1964 is looking for the legacy consumer and recruiting them into the legal market. That's something that we as the legal market need to do a very good job on. somewhere between 20 and 40% of consumers are still purchasing in the legacy market. That is the biggest white space in the Canadian cannabis industry currently. And we have a considerable amount of demand around our 1964 brand. It's really bringing those legacy strains into market. It won Brand of the Year last year. It also won Flower of the Year twice in the last 2 years at sort of the Oscars of Canadian cannabis. It won Vape of the Year, Best New Product of the Year, Edible of the Year. Did I say hash? And then at those awards, Simply Bare was the write-in by bud tenders of the brand that they love the most. So we're very, very proud of that portfolio. And that's really a flower-forward portfolio. Our third brand that's up there is called Wildflower. It started out with a stick. As we're a recreational company, we can't make medical claims, but we do have a topical stick. I like to call it very similar to Voltaren. I use it for my sore knee and tight neck. My 78-year-old mother uses it every day. The Wildflower stick is very effective, but we also have found the wellness consumers looking to satisfy need states. So whether it's pain relief, sleep, or relaxation, that range follows the same approach. And I'd say that very proud to say that the Wildflower stick is the #1 topical in Canada and has been for at least 3 years, probably longer. I haven't looked at it.
Thank you. Thanks for that. I'm glad you touched on the genetics piece in the first part of your answer, because, you know, when I look at the cannabis industry, and I think most people think this is a commodity industry, but, you know, it is to some extent, but like having a strong genetics portfolio, I think is key. And the LPs that are winning in the market today have these strong you know, genetics development programs. So I'm glad you touched on that. Let's talk about the cultivation. You know, you have 2 assets now. You know, what can you tell us about cultivation?
So we love to grow weed, and because it's called a weed, everybody assumes it's very easy to grow. It's very easy to grow poorly, I would say, and it does grow very well poorly. I see a number of nods. People have probably tried to grow it, and if you try to smoke what you grow at home, unless you're a very knowledgeable person, it's typically not very successful. I see in 15 years, cannabis will be an ingredient, but there will always be a home for beautiful premium weed. And that's what we do very well. So we started in Delta, British Columbia, which is about, if you've been there, many people have. It's about half an hour from downtown, very close to the airport. Our Pacifica facility is 125,000 square feet. On 20 acres of land, there is the capability, if we so desire, to build further. That is an all organic, certified organic facility. We are the world's largest scaled, and I think at this stage, only scaled premium organic facility. So we're leading, which is exciting. Why does that win, and why does organic win? It's because it gives a very richness to the flavor of the plant. So if you think about the root ball, we grow in pots. Each of those root balls, it becomes a little bioreactor where the plant has to work hard to pull the fertility out of the living soil, rather than kind of like at home with your houseplants, you probably put a liquid feed into it and dump it on top. We don't do that. We actually do it through the recipe of the soil and the fertility. It forces the plant to work harder. And then when it goes to flower time, it's when the plant is stressed and it produces more expression and a more quote unquote desirable flower for someone to come and check out. So the Pacifica facility is really the start of everything we do, but very excitingly. And if you saw our press release on Monday morning, we purchased a facility at the beginning of this year. We closed the deal in June, raised some money in the springtime, actually in a very tough market. And today are proud owners of a licensed facility, which was the first licensed facility in British Columbia. It's now licensed again it was a profitable premium facility at the time. It's about an hour and a half from our existing facility, so easy to manage from an operational perspective. We are moving very quickly to get that up and going. It will add about 40% capacity. A good CEO would tell you we probably we want to under promise and over deliver. The company before us said it had 6,900 kilos of premium capacity. We've said 4,500. We know it's going to take a minute. We're very pragmatic. It's going to take a minute to get that optimized. And we expect to see first revenues from that in the first half. But I think the engine will really turn on. We'll see out of the third quarter for us next year. We're at a very exciting spot because the next question is, well, can you sell it all if you've got that product? Right? That was your next question? Yeah. Sorry, he went, shh, darn it. I'm stealing the mic. We believe we can. We have strong demand for our brands, in particular the 1964 brand. So why having an indoor facility is exciting is because we can take genetics that we weren't able, that we grew at our Pacifica facility, but maybe couldn't optimize and get really strong yield. We can put them in a different environment and we believe they'll do very well there. So we have a large demand for large format bags, which is where the largest legacy consumer purchases.
Thank you. So where do you see the most growth opportunities? You know, with this new cultivation capacity that you're turning on, like where will you place this volume? Well,
so Canadian cannabis has moved to the channel and the brand. So there are a lot of people growing large volumes of weed at mid-grade and value scale. What we're not seeing is net new premium facilities turning on, whether in Canada or around the world. So we're very excited to be sitting in that positioning. We have demand and we see that we could sell all that product today in Canada if we had it. And I say that very confidently, but we also have a lot of demand around the world for premium weed. There has been big opportunity in the weed world for just any product going anywhere into those markets. So Germany, Poland, and Australia being the current early markets. What we're seeing is that consumers start to move and ask for more premium products. But we expect as we look towards the international markets, we will not be diverting our attention away from our core domestic market, which got us here. But if you go back to the vision that I stated at the beginning, it's branded premium house of brands. And as we look internationally, we'll be looking to build brands and not sell hockey bags of weed.
At this point, I think it might be helpful for people to get a bit of a financial snapshot. You know, I mean, those who know me, you know that I like to invest in companies that are growing and profitable with a strong balance sheet, which I believe is the case here. But yeah, what can you tell us about the financials?
So I'm in a quiet period for Q3. I can tell you at June 30th, we released our results. We had record revenue, reminding you that over the last 3 years, we've built the business from one single facility and almost doubled the revenue. That's because we've used contract manufacturing, contract grow, and the launch of new products under our brands to build the business. We now expect that we're going to be putting new throughput through that with the supply. We have the brands, the demand, the team. We just need more to go through it. Even though in that environment, we in the second quarter had 7 million in cash, 20 million in working capital. We're currently trading at about 0.6 of our revenue. And it was fun yesterday listening to the conversations where people were pitching and hearing that companies are trading at 11, 12 times next year's EBITDA. And I'm going, we're trading 8 times last year's EBITDA. You know, it's just cannabis has been punished, but there are very good companies emerging.
I totally agree with that. Okay, in terms of, you know, catalysts or milestones, you know, what would you like to achieve over the next 12 months? What should the investors look out for?
Watch for Cascadia and the first harvests and the operations. You're going to start to see that in our results in the first half. But really, we're committing more that the third quarter will be when we'll see the inflection point. So that trajectory. And then we've done something called a test and learn into the international markets. Again, we'd like to move into a branded play. I expect within 12 months, we'll be looking at that. It will depend on, we need to make sure we're satisfying our Canadian customers first, and then moving to the international markets with the branded play.
Let's open it up to maybe Q&A from the audience. Does anybody have questions? Yeah. Yeah. So the question is the ROI on the ROI on the new facility.
So we purchased the new facility for $4.5 million. To build it today, we had someone walk through. They said it would be 12 to 13 plus 2 million on the land, plus the specialist cannabis equipment in it. So my estimation, 18 to 22 million, something like that. Great great acquisition for us. We spent 4.5. We've spent about 1.5 to date. We've got another 500,000. I'm sure there'll be optimization things that we identify. All of that is to say, we expect it's well less than 2 years on a payback. Pending where we place the product, it could be as low as a year, but we're very bullish on it. And the nice thing is, if I remind you, the brands are there, the team is there. We're just putting more throughput through the existing channels that we've got. So it puts us in a great position from a profitability perspective. And all that product will go to a bulk packed stage and actually be finished and packaged back at our main facility. So it will be very efficient in terms of use of resources.
That was great. Thanks. Thanks, Mathieu. That was great. Thank you. When you refer to premium, can you define premium in your eyes, and maybe like the market is, you know, whatever, 5, 6, 7 billion, I think, in Canada. How much of that is premium? What's the difference between the price for a gram of premium versus the hockey bag weed that you refer to? Thanks.
That was a great and slightly tricky question. There is one set of data that is widely used by analysts called Hi-Fire. Hi-Fire, when you look at it, doesn't look at it on a brand level. So it looks at it on a price level. So it takes premium as anything is 20% higher than average price, which means brands can move in and out depending on price compression. We, when we speak publicly to the market, we speak about our brands using that data, because that is actually the most punishing to us. When you look at truly on the shelf and you walk into a store and you talk to a bud tender, there are certainly super premium, mainstream, and then value brands within Canadian cannabis. A premium product, so an eighth, which is 3.5 grams of our Simply Bare product here in Toronto, would be about $45 to the consumer. 1964, the same format, would be about $35. Okay. The cheapest that you could probably buy is maybe around 20 in the market at value. I see a lot of nodding heads, so I think my pricing is pretty good. So that's the range. What is premium? Kind of similar to Scotch whiskey or wine. That's where you'd think about the differential. You know, we're looking for a single malt reserve 16-year to try and speak language of many people, versus a blend from whatever was available to the value sector. That's kind of the experiential difference. And in terms of the size of the market, I believe premium is currently under 20%. And based on the way the data has moved, it's actually moved down in market, but we've seen our share growing. And we've seen our sales go up in our super premium category. So sometimes the data being cut, it depends on the way you cut it. So we try to play it as straight as possible. And in terms of the legacy market, I actually think it skews more premium. Heavy consumers still buy from the legacy market because of the early days of Canadian cannabis. They were very burned by very high prices and very poor quality. So it's taken a while to get them back.
We have time for one last question.
Are you in the process of obtaining your EU GMP certification? If you are, how long will that take before you get it? How many products do you have registered in Poland, and what other European markets are you looking at?
That was a great question. So as I said, we focused on the Canadian market. We have a GACP certification at our Pacifica facility, which allows for export to an EU GMP facility. That is this year with the international markets, we've done test and learn. We've had to pull some product, and it'll be probably less than $1 million of revenue total for the year, because we're testing partners and learning accountability. I've been in this game 10 years. I've learned a lot about how you do business with people. We do business with people and trusted teams, and are looking at channels. So we by the end of this year, we'll probably have 3 markets. We have not gone through stability studies and long processes with various companies. I believe in the next, call it 3, maybe 4 years, we will need EU GMP, or if there's a Canadian GMP standard within our business, but we don't have it today, and we're not actively pursuing it today.
That's all the time we have. Thank you very much, Margaret. Feel free to come see Margaret if you have more questions. Thank you. Or Glenn. Thank you.